Hello and welcome to an FXTimes daily market recap. I'm your fundamental market analyst, Nick Nassad. Today is Tuesday, February 23rd, 2010. The main theme today was a return of risk aversion as we had several developments that showed that the global recovery may be faltering somewhat. First, we had a weak German IFO Business Climate Index. Second, we had the Bank of England Governor Mervyn King say that the Eurozone recovery has stalled, which could hurt the UK economy in terms of trade. Plus, he did not rule out further quantitative easing in a testimony today before Parliament. And a third development, we had a sharp drop in U.S. consumer confidence, which increased risk aversion and pressured higher yielders. If we take a look at the euro-dollar pair, we see that following a rally in the Asian session today and in the start of European trading, we hit a high just below 1.37, but in the wake of the aforementioned IFO Business Climate Index, the euro gave up its earlier gains and then proceeded to fall further than its open in New York trading. In comparison to the euro, the dollar is a safe haven, and that was the reason for the big gains by the greenback following this disappointing fundamental release. In that release for the month of February, the Business Climate Index, it was the first time in 10 months that it did not increase. The index registered at 95.2 as we saw current conditions slide compared to last month. The main reason for a drop was a decline in wholesaling and retailing business climate, while manufacturing remained largely unchanged and construction actually increased yet again. The news caused European equities to begin sliding in overnight trading, and then those equity losses were extended as we got into New York trading. Taking a look at the euro-yen pair, we see a very sharp slide in favor of the yen as it was a premier destination for traders seeking safe haven. We cracked below an upward sloping line of support we had set up in yesterday's video here, right at the 123.75 level. Then we proceeded to move below horizontal support here around 123.60. That initial slide came as a result of the weaker than expected IFO Business Climate Index, which came out here around this overnight high. After we moved past this support, we had the U.S. Consumer Confidence report at 10 a.m. Eastern, which caused a sharp slide further downward in favor of the yen. Here we moved below an upward sloping line of support in what had appeared to be a bit of an upward channel, but now we've even broken below that. So we may be moving perhaps into a bit of sideways trading if we see our next support setting up horizontally, let's say from this low 2 weeks ago. Overall, we saw the labored gains that the euro has managed throughout the last 2 weeks to be completely paired in today's session. The dollar-yen showed a similar sharp slide in favor of the yen in today's trading. Most of that decline came after the consumer confidence report, though we were sliding overnight already. This pairs most of the gains we had seen in last week following better than expected U.S. economic data and a move to normalize monetary policy by the Fed. The yen benefited the most compared to other currencies as we saw weakness emanating from the other big three economies today, the Eurozone, the UK, and the US. Zooming this pair out, here too we had a break of an upward sloping support level right around that consumer confidence report. So a technical level had set up with a fundamental release, and the risk event, the weaker than expected consumer confidence report, has boosted the yen. In that report from the conference board, the consumer confidence index for the month of February slid all the way to 46 from last month's 55.9. Both the present situation and expectations for the next 6 months deteriorated. Consumers are feeling more pessimistic as they have major concerns about current business conditions and the job market. They also remain extremely pessimistic about their income prospects. All combined, it's a worrisome sign that consumers may rein in their spending and put downward pressure on the U.S. economic recovery. The news caused U.S. equities to sell off, and as I mentioned, we have seen a large jump in risk aversion in the currency markets. The pound dollar pair also, after hitting an overnight high around 1.5575, slid rather sharply as we had the Bank of England Governor Mervyn King taking questions from Parliament in the semi-annual inflation hearings. There, he said that the Eurozone's recovery has stalled, and as a result, that could hurt the UK trade. An increase in trade was factored in by the Bank of England as a positive to the UK recovery, as the pound had been weakening, which should make UK exports more competitive abroad. Also, King did not rule out the Bank of England restarting its quantitative easing policy, which was suspended earlier this month after having bought £200 billion of assets with freshly created central bank money. So a resumption of the quantitative easing would be pound negative. As you can see, we did have a slight counter rally following this sharp drop, and we did test our moving average, and it seems to be holding as resistance currently as of 12 p.m. Eastern Standard Time. The pound yen pair broke below its support near 141 in the wake of the Bank of England hearings on inflation, and then we fell even further after we had the weaker than expected U.S. consumer confidence data, which you can see there. Zooming back, this pair too had broken an upward sloping line of support after we had this sharp slide several weeks ago as a result of the Greek debt worries that sent a big bout of risk aversion throughout currency markets. So we'll see now if the support that held back then around the 138.50 area will hold this week. Switching now to our commodity currencies and growth-linked currencies. Here we're looking at the US dollar, Canadian dollar, and we see a rather sharp move in favor of the greenback in today's trading as a result of the risk aversion. We had found support around 1.04 in yesterday's session, and today we have rallied 145 pips from low to high as of mid-New York trading. So that moved us above our resistance from last week at around 1.0525, and we're looking to test the 1.0550 area shortly. Similarly, the Australian dollar US dollar pair, after breaking above resistance overnight at the 0.9020 area and hitting a high here around 0.9070, slid back into its consolidation area here, the sideways trading, and fell down to support around 0.89. That matches up with a level of resistance turned support that we had seen from the beginning of February and the middle of February, and we'll see if we're going to push below that level by the end of today's trading. Our next level of resistance would be here, which was our low on Friday. Level of support. So overall, the declines in German business confidence and U.S. consumer confidence has spurred investors towards safer assets such as the yen and the greenback. We'll see if this theme develops throughout the rest of the week as we get Bernanke's testimony and further economic data. On that note, let's see what fundamental releases we have coming up in the upcoming session. Tonight, Japan releases data on its trade balance as well as corporate inflation, while Australia releases data on construction and wage prices. Overnight, Germany posts its consumer confidence and final version of fourth quarter GDP, while the Eurozone releases data on industrial new orders. Tomorrow at 8:30, Canada posts its quarterly corporate profits figures, while at 10 a.m. we get in the U.S. new home sales as well as Fed Chairman Bernanke testifying before Congress in his semi-annual testimony on monetary policy. Also tomorrow, Treasury Secretary Geithner testifies in front of the House Budget Committee on the 2011 fiscal budget. So traders will be looking towards the comments from these two government officials, and that could push the currency markets in tomorrow's trading. So that will wrap up today's broadcast. For more news, videos, and analysis, please visit our site, FXTimes.com. I want to thank you for watching and wish you good trading.